We've seen steel prices also make a comeback. With that, we're going to now talk about JSPL. It came out with the third quarter earnings, and the earnings are muted, So there is reduced demand that has impacted the company's performance as well. And joining us to talk us through the performance and what to expect going forward is Mr. V.R. Sharma, the Managing Director at JSPL. Good morning, Mr. Sharma. It's always a pleasure talking to you. Thank you so much for being live. Now, demand has, of course, been impacted and like your industry peers, by unseasonal rains, the muted demand that we've also seen thanks to, economic activity being impacted by various COVID waves and states taking different views. But going forward, what is the guidance that you can provide here to the viewers of ET Now, the analyst community, your shareholders?
The demand in Q4 has picked up after the budget speech of FM. Because the infrastructure projects are being given in priority, and this kind of priority and this kind of declaration by Finance Minister in the budget has given an impetus to the steel consumption across country, especially the pipeline projects, gas pipeline projects, and we are expecting that more and more spending will be done by Indian Railway to upgrade the tracks and also to lay new tracks. Apart from that, we are looking for a very good business in terms of power transmission lines, which are likely to come in the country in times to come. So I think the overall steel consumption will increase in the country, and we are seeing the effect after the budget. The construction activities has increased, and finally, the overall demand of steel has increased.
Okay, so that's as far as the demand picture goes. But Mr. Sharma, you're one of the best people out there to get an understanding of what's happening with steel prices. We've seen the run up, then we saw steel losing its luster. Now again, steel prices are coming back. What's your assessment?
Yes, you are right. The steel prices came down in the month of December, the third quarter last month, primarily because of two reasons. One is a fear of Omicron, and people were apprehending maybe there will be another lockdown in some different states. And the next is the unseasonal rains in Chennai and also in down south and other southern states. So these two factors, they brought down the steel consumption in the month of December. But finally, in the month of January, it has picked up. And now in the month of February, it is booming again. Apart from that, the input costs, they had increased during the October, November, December quarter. Especially the coking coal prices have gone up to $445 to $450 FOB Australia. So that has impacted the balance sheet of each and every steel industry. But the Q4 seems to be good, and the prices are going up. We feel that if you see the delta in between Q3 and Q4, at least 2,500 rupees per ton will be delta. That means price increase by 2,500 rupees on an average in Q4 the steel industry will get.
So Sharma, this quarter not only did we see your top line growth narrowing on a sequential basis, but even your margins have been impacted. So how long do you think we are going to see pressure on the margins? And do you think that you can you aim to go through your cost headwinds going forward?
You see, China is again consuming a lot of iron ore, $6 per ton. The iron ore prices have increased in the last 2 days after their annual holidays. Now, the coking coal prices are still at its peak. I think this is the ever highest price availed by coking coal miners in the world. $445 to $450 per ton FOB. That means about $480 CFR on the Indian coastal area or any port of India. So this is a very abnormal price. So we feel that there will be cost pressure on the steel industry. And this pressure, the entire 100% pressure cannot be passed on to the customers because of the affordability issues. So there'll be pressure on margins. But still, it is a better EBITDA level, and we can definitely manage it. And we are waiting that as soon as the coking coal prices they come down, we will pass on the benefits to the customers.
Right, and you've also announced a capex of about 18,500 crore rupees over the next 5 years. What is the expected asset turnover ratio for this capex, and how much of the top line growth could this capex lead to going forward?
18,500 crores, we are going to add another 6 million ton capacity. And we will be in Angul, we will be about 12 million ton, and Raigad will be 3.6 million ton. Put together, by 2024, we'll be at a level of 15.5 million ton capacity. And we are expecting a good market, because country this year is going to produce about 118 or 120 million ton steel. And next year onwards, we should aim for 140 to 150 million ton steel production and consumption. The current financial year, the steel industry as a whole has done a remarkable exports, that is about put together 24 to 28% of the total produce from the country, and that has brought a lot of foreign exchange revenue. I think this tempo will be maintained. We'll be in a position to export about 25% of our total produce to the rest of the world, and the market is likely to be in a very positive frame.
Okay, we'll leave it at that for today, Mr. Sharma. Thank you so much for joining us live today on the market and being so candid about the earnings report card and, of course, the demand outlook, and as for steel prices, your assessment.